Yay! Life insurance. Finally. I love how you can see the number of slides to each one when we do these chapters. But now it's life insurance. And as you can see, another big major topic for our gross income. Now when we talk about life insurance, again, this is mostly happens when somebody has passed on and you're going to receive some proceeds. Now, this is excluded from gross income if the proceeds are paid to beneficiaries by that reason of death. And again, we will receive a 1099 for this if there is any kind of death benefits. This is mostly, again, with pensions and whatnot. So, if proceeds are taking over several years instead of that lump sum, the insurance company pays interest on unpaid proceeds. And that interest becomes taxable because you basically earned that interest on the life insurance proceeds. So this is where it becomes complicated. So if it's one of these that gets paid throughout so many years, we would actually have to watch out for this interest. It's kind of like with the IRS. If the IRS owes you money and they haven't paid it and what they're supposed to, they owe you interest. And you get the good old 1099-INT. So, already with the example, might as well just knock one out. So, we have Karina. She dies on June 5th, 15. Why did I say 5th? Because I saw 5. Anyway, she dies on June 15th of 2018 and leaves Daniel, her husband, a $500,000 life insurance policy. And then, of course, we check with forensic files, make sure everything was kosher, and that he didn't do what we think he did. Notice this, on forensic files, if insurance is ever involved, it's usually the spouse. Okay, off topic. Just something to keep you entertained. Again, forensic files, awesome show. Anyway, the proceeds of which he elects to receive as $100K per year, plus interest for 5 years. In the current year, Daniel receives $105,000. And that seems they're kind of off on that. That probably should have been $100K plus $5,000 interest. They did this has been $110,000. Again, errors do happen. Again, I can't edit these. So, yeah. So how much is taxable to Daniel in the current year? Well, as we already stated, that the $100K is a non-taxable item because it's going to the beneficiary. But that interest income on the $100K has to be included into the gross income calculation. Simple as that. Again, if it's the payment, non-taxable. If it's interest, that's taxable. And they need to watch out with their errors. We only found a couple. Again, if you saw before in the annuity example, one of the formulas has division instead of multiplication. If you haven't seen that video, go back to that one and you'll see as I go through that, because it just didn't look right. Like, this doesn't look right. How are you going to add 105,000 plus 5,000 to make 105,000? Oh well. Don't get distracted. We'll keep going, because I don't want to make these videos too long. Alright. Now, with life insurance, there can be early payments of life insurance. And these are known as accelerated death benefits, or vitalical. Probably cannot pronounce that word correctly, but we're going to say vitalical settlements. And they're excludable from gross income in the following situations. We have someone that is terminally ill or chronically ill. Taxpayer collects early payout from insurance company. Again, basically allowing the person to do their bucket list before they pass on. We have also terminally ill or chronically ill. Taxpayer sells or assigns policy to a vitalical settlement provider. Again, someone that's going to eventually pay out the money a little bit early. We have terminally ill patient must have certification from medical doctor stating that he or she is reasonably expected to die within 24 months. Talking about life insurance sometimes can be so morbid. And again, tax people, we're not cold people. We just are logical minded. But we feel emotions. And we know how it feels when someone dies. But to get that notification that you got within 24 months, yeah. Anyway, we also have chronically ill patients. They have to have a certification from a medical doctor stating that he or she is unable to perform daily living activities without assistance. Again, this is just to give us the benefit of the doubt. But we have to have that certification. Both of these do. Alright. Now, if somehow the policy is transferred for value, okay? So again, we have still early payments are excludable only in these situations with terminally ill or chronically ill taxpayers. This one is dealing with transfer of for value. So we're trying to get some income going on here. All or part of the proceeds may be taxable to the recipient. Okay. So when a transfer of value occurs, proceeds at the death of the insured are taxable to the extent they exceed the cash surrendered. Okay, so basically up to the amount the extra amount of the policy. So surrender value of the policy at the time it was transferred, plus the amount of insurance premiums paid by the purchaser. So if we have to pay extra payments, those are considered taxable. So again, we're not the beneficiary. In a way, we bought the actual life insurance. Basically, it's a hedge fund to us. We're placing bets on when you die. This little part is just getting way too morbid. So there is exceptions to this, as policy proceeds are not taxable if the policy is transferred for the value to any of the following: a partner of the insured. I'm sure they're talking about actual partners, but a partnership in which the insured is a partner, or a corporation in which the insured is an officer or a shareholder. Basically, he's giving it to the business, one way or another. So, again, they're just placing bets. So, here's an example of a policy transfer. Nice. Let's hopefully we have no errors. You have errors in the last two examples. Okay. Brianna transfers to Zima. There's a name for you. An insurance policy with a face value of $25,000. Okay. And a cash surrender value of $4,000 for the cancellation of debt owed to Zima. Okay, they added the cancellation of debt. That's a little extra. Zima continues to make payments, and after 3 years, Zima has paid $1,500 in premiums. Brianna dies, and Yvette collects the $25,000. Okay. How much must Zima include in her gross income? Would the answer differ if Zima and Brianna were partners in a partnership? If so, how? Alright, first off, we know that it's excluded with partners. But this is what's going on. Alright? So, Zima must include $19,500 in her gross income. I think they got the wrong name when they got Yvette. Probably going to be Zima collects the $25,000. But we have the $25,000 minus the $4,000 minus the $1,500. This is equal to the $19,500. Yeah, we have a little problem here. I think that's supposed to be Zima collects the $25,000 and not Yvette, because again, Yvette got the money, Zima didn't. So why would we be including $25,000 in their gross income? So what is that? Another error? Oh well. If Zima and Brianna were partners in a partnership, the entire proceeds, $25,000, would be tax-free. Again, we wouldn't have to worry. So, that is just interesting. Anyway, so that will conclude the life insurance part. And we get to attack another major part, and interest and dividends in the next part. Nice. Okay, so I will see you for that part.